So the first crypto we'll be talking about is obviously Bitcoin. So if you know anything about cryptos, you obviously know Bitcoin because it's the first one. It was developed in 2009 by Satoshi Nakamura. This Satoshi guy, nobody really knows who he is. And that's why I have a question mark here, because nobody knows who this guy is. Now, whenever there's a new cryptocurrency, it always comes with a white paper. And a white paper is basically a document that says what this crypto is, how it works, the technology behind it. Satoshi wrote his white paper here, which we can see. And I highly recommend reading it. It's very interesting. A bit of a hard read towards the end, but shows you how the blockchain works for them, the proof of work system, the network, the incentive distribution, all of that stuff. Now, the name he put on it is a pseudonym. This isn't anybody's name. Actually, there's one guy who has this name, and a bunch of people went to see him, but he has nothing to do with this. So there's a bunch of theories about who this Satoshi guy is. Some people think it's one guy, and to hide his identity, because this is something that's banks and governments don't really like in a way. He wanted to hide his identity. Some other people think it's a group of people. There's other theories where the government or somebody who was with the CIA is responsible for it. Anyway, a bunch of theories. The truth is nobody knows, right? So nobody knows who came out with it. And you know what? It makes sense that if you're launching a cryptocurrency, something that's decentralized, there's no central authority that can govern it. Nobody can come in and say, I want to create more of it or less of it, or I want to tax somebody, keep some of their money. It could cause a problem for governments and banks, right? So maybe if you are, coming out with this idea and you want to, launch a crypto or, money in a way that the government can't really control, you might want to hide your identity, right? So that is something where we don't really know who the creator of it is, but it has a huge community now. So since it's the first one, there's a lot of smart people that keep working on it and develop on it, and make sure it's going in the right direction, even though that person is not there, is not in the picture. So Bitcoin is the USD of cryptocurrencies, meaning that the same thing as when you're exchanging currencies, Canadian to USD or Japanese to USD. A lot of currencies are quoted on Bitcoin, meaning if you want to buy Ethereum, you can buy it with US dollars, but you can also buy it with Bitcoin. And when you're looking at all these cryptocurrencies and you're quoting a currency with another, the same way you quote Australian dollar with US dollars, a lot of these other currencies are quoted on Bitcoin. So it's like the USDs of cryptos. So obviously, a lot of people see it as the most robust. And, if they see that if all of this goes down, Bitcoin would be the last one to go down because it is the strongest one and it is the USD. And if Bitcoin does crash, well, all other cryptos might crash as well. That's how big and strong it is. It's like the USD of cryptos. It's the biggest and most trusted and most used cryptocurrency, right? If we go back on CoinMarketCap here, you can just see that not only is it the biggest, but when you're looking at volume, so the amount of transactions that occurred, Bitcoin is by far the largest, right? So also it's the most used. You have ATMs, you have a lot of people who, transfer Bitcoin from one another. The other ones, way less, right? It's intended to be a way of payment or a store of value, right? So basically transferring money from one person to the other and storing value. Now, when we're looking at, what it is or what it's used for, it doesn't mean it works perfectly for that at the moment, right? So Bitcoin, as a way of payment is still not where it's supposed to be. So it's used for larger payments. But again, for microtransactions, going to buy a coffee, you won't use Bitcoin, and it's not feasible right now. The wait time is long. So Bitcoin, as of now, in its protocol, blocks take about 10 minutes to get confirmed, right? And usually when you have a block, you wait for several blocks to get confirmed because you want to make sure that this transaction goes in the blockchain, because if there's another block that comes in and that block has something different and you have two different blocks, two different chains, well, the thing is you want to wait until there's other blocks that go on top of your block to make sure that you are part of the longest chain, because the short chain might have been an error, somebody who made a mistake, somebody who was malicious, and then since nobody continued on it, that chain didn't continue and everybody continued on the other chain. So you want to make sure you're part of the longest chain, so you make sure that you have several block confirmations, and with most places are going to wait for 6 block confirmation. So that's about an hour of wait time. So again, some things might improve or change with time, and a lot of these currencies, they want to achieve something, but they're not there yet. That's something to keep in mind, right? It's deflationary. What does that mean? It means that instead of your money or your coins in these situations being valued or losing their value with time. So example, when you have dollars, every year your dollars are worth less. Why? Because the government prints more money. There's inflation. So whatever you could buy with your dollar, next year you can't buy. You need more dollars to buy that same thing. Cryptocurrencies is different. With Bitcoin specifically, Bitcoin is a deflationary coin. Why? Because it has 21 million coins maximum supply. We can never generate more coins than that, ever, right? And the thing with cryptocurrencies is, if you have your private key, which gives you access to use your currencies, right, and you lose it, well, what happened? What happens is that these coins are lost forever because you lost your access to it, and nobody else can access them because nobody has your private key. So with time, it's only normal that some people lose their private keys, and this has already happened to a lot of people. There's stories of people losing hundreds or thousands of bitcoins because they lost their key. There's the story of a guy who was mining cryptocurrencies with his laptop years ago, and you can probably find this on Reddit. And he was mining it on his laptop, and his girlfriend was like, "Stop, what are you doing? You're wasting time." And he ended up stopping, and he at one point threw away his computer. Then the price of Bitcoin spiked, and he realized he had millions and millions of dollars worth of Bitcoin on his laptop, because that's where he had his private key. So what he ended up doing is he raised a few $1 million in capital to go in dumpsters and try and find his laptop. This is a true story. He didn't end up finding it, and those coins are lost forever, right? And that's something that's going to continue to happen. So that's something great if you have a currency that's deflationary, because just by holding it, it should be worth more. It becomes more valuable with time. Has a huge community, like we said. Huge community that backs it up and wants to make sure that it's going in the right direction. It's extremely secure. So again, when you're looking at cryptocurrencies and you're looking at security, the only thing you're looking at is how long have they been? Has the security been breached? Because there are other weaker coins that have had their securities breached, and then that nullified their purpose in a way, because it proved that it's not working. The proof that we can get is real life proof. It has been working for all these years, right? And never had an issue with its blockchain. Never went down, right? Never got hacked. Nobody lost their coins because somebody was able to hack the blockchain or do something crazy like that. Now, that doesn't mean there's not other issues with it, but these are the big points. So the protocol for Bitcoin is non-reversible transactions. You can't go back in time and change the blockchain. Uses hash functions and digital signature cryptography, which we've looked at earlier. So the blockchain we looked at earlier, that's really the one that Bitcoin uses. It's a peer-to-peer network, uses proof of work mining. So you have miners who are doing proof of work, so solving a puzzle, giving a block, getting rewards for it. There's other types of work that you can do. We have proof of work. There's proof of stake that we'll look at later for another coin, but Bitcoin uses proof of work. The way proof of work works, and like we said, where you're trying to solve a puzzle, mining has become something big, where a lot of people want to mine to get these rewards. And to mine, you have to buy equipment. Some coins are easily mineable using graphic cards, so GPUs, but some coins like Bitcoin, you can mine them with ASIC miners. So with machines like this. Let's ASIC miner. This is by Bitmain. Let's see here. Can I see Bitmain's official website? Bitmain. So Bitmain is the company that sells these machines, and you can see them here. So these machines are used to mine Bitcoin, and basically you leave them running. They're trying all to solve this puzzle as fast as they can. And if you're able to solve the puzzle, you get the rewards. Now, mining there's a lot of controversy about it. Some people say it's good. Some people think it's not as good. And yeah, these are the miners. Now, why would somebody think it's not as good? Because it takes a lot of energy, right? You buy one of these machines, you leave it running 24/7. It consumes electricity, and the biggest mining firms are consuming so much electricity. And I haven't looked at the latest reports, but some of these firms are using more electricity than entire countries, right? That's how much electricity they're using. And then, these machines, there's a newer version every now and then, and they go obsolete. So it's a lot of money and energy wasted. Just to mine one Bitcoin costs several $1,000s. So, a lot of people are coming to the conclusion that, is this the most efficient way, right? Are we going to be, consuming all this energy and wasting it in a way to have this system work, right? To support, I guess, this ecosystem, So there are other ways as well. It's always a subject that's discussed. We mined before trading cryptos because there was a lot of money to be made in mining. Now it's extremely competitive, especially with the fluctuation in prices. We had sold all our mining equipment in late 2017 at a higher price than we had bought it at, and we had mined a lot of coins with it. So it was a good entry and exit for us. But just to say that, mining has its positives, but it is a subject that's very controversial because we do waste a lot of energy doing that. Some cons with Bitcoin: it has slow transfer time. So if I want to do a transfer quickly, I have to wait for several confirmations. So I have to wait, half an hour, 1 hour to make sure that it has arrived. Again, that's a problem because we're so used to this fast transfers. Now, there are ways to have faster transfers. There's the SegWit, and we'll talk about some of those later, and some other technologies that come up, like the Lightning Network and other things. The problem is Bitcoin is always slow at implementing new technologies. So another coin might come out with a new technology, or there's a new technology that another coin like a big coin decides to implement it. Bitcoin isn't going to implement it right away. The community for Bitcoin likes to take its time and say, what, we're not going to add this improvement yet. We're going to wait, see how other cryptos handle it, how it works, if it's very, if it's very safe, and then we'll implement it later. So they're always slow on implementing new technologies, but that's not, I put it in cons, but it's not definitely a bad thing, because they want to make sure they don't implement something that has any flaws that can take the system down. So they take their time. I put it in cons because they're always going to be the last guys to implement new techs. But at the same time, they have a reputation, and they have, it's on them to not fail, because if they fail, it'll be the end, not the end of cryptos, but it'll be a really big hit. So it's a con, but at the same time, it's not a con. Another thing is high transaction fees. So the fees are not little. It depends on how many people are transferring at the time. So if a lot of people are transferring, you have to pay a higher transaction fee to incentivize miners to put you in the block. So when miners have a lot of transactions and they have one block to fill, well, they can decide which transaction do they put in this block. They're going to take the transactions with the highest transaction fees. So at times there were issues, when there was all this volatility in end of 2017 and early 2018, actually, where there was so many transactions being done that transaction fees became extremely high, and you had to wait a long time to get your transaction through. There was one time where it took something like 8 hours or more to get a transaction through, and that showed us some flaws of having Bitcoin do all of these. And that's why there's a lot of other currencies that are way faster, that have blocks that are way quicker. Some coins where you can transfer coins within a few seconds. So again, there's a lot of different coins that have different applications and different protocols. Bitcoins, even though with its protocol that's a bit slower than others, it still has this, I'm the first, I'm the safest, and I'm proven for the longest. I believe that there's no portfolio that shouldn't have Bitcoin. In our portfolio, we have a bunch of Bitcoin, we have a bunch of other stuff, but Bitcoin has some pretty good things about it. And in all technology sectors, when you're looking at the tech sector and the stock market, you always have the biggest tech companies that own the majority of the market, like Amazon or Facebook. You have the biggest tech companies that are gonna eat all the market cap for that sector. It should be the same thing for cryptocurrencies, where you have the biggest ones who are really gonna own much of it. And again, Bitcoin is a staple name, everybody knows it. It's something that definitely, if you are in cryptos, should be part of your portfolio.